NVIDIA is a unicorn in what it's done. When you look at these names, we've talked a lot with different investors as well across our own show. It really does still seem to be, hey, it's NVIDIA. Maybe you can say Broadcom is playing second place, but everybody else is so nowhere to be seen.
Because I think that for NVIDIA, what they've done so well is like their consistency on not only the pace in which they're ramping now new series of like GPUs, which they do command now, 90% of that very lucrative GPU market, and also being involved in data centers, which have just seen such an outpour of growth and also an outpour of support. You have your biggest companies in the world shelling out tens of billions of dollars this year in CapEx, expected to be allocated hugely towards this data center build. So that to me is like the first wave of this AI development. But I think there's still a really interesting case to be made for these foundry businesses like Taiwan Semiconductor. They are like so asset light. Their business model is genius to me. And they position themselves to basically have a hand in every piece of major technology right now that we all know and love. So that makes them interesting. Micron, for example, then high bandwidth memory, which has been very challenged under, huge demand. They were not able to fulfill that from a supply standpoint. So no one has been able to execute as well as NVIDIA or be in as lucrative of an area of AI as NVIDIA. And that's what continues to separate them from the rest. There's a reason that they're the biggest company right now in the world. Well,
and then there's a few of these names that I don't want to say they're overlooked because they're not, but they're in a different tier.
They are.
And they
I would say overlooked.
They were the ones that were really struggling due to some of the restrictions on exports that the U.S. had placed on China. And then, correct me if I'm wrong, there was an announcement of rescinding some of that. And you're seeing, of course, subsequent reactions, positive ones, in some of these names that have been most affected by that.
Yeah, and these, I would say, hugely overlooked. I was like, Synopsys, I haven't looked at this chart in a good while. But actually, nice move today. U.S. government has rescinded, though, its export restrictions to these chip design softwares to China. 3 of the largest players in the space did announce this earlier today. Siemens, which is based actually in Germany, does have its subsidiary Siemens EDA, which is based in Oregon. But as a result of these export control reversals, they did say they've now restored their full access to their recently restricted software as well as technology and resumed sales right now to its Chinese customers. So Synopsys and Cadence also both said they were working to do the same. The U.S. had informed these companies that back on May 23rd, they were required to obtain these various licenses before, of course, making these controls to export in China regarding the technology focused heavily in semiconductors. But it did also follow a tightening of export controls on other products, which did include the restricted sales of these advanced AI processors. Think like NVIDIA, AMD. So this was, I'd say, that the next tier, if you're putting like the AI wave into tiers, this is a definitely affected space, but chip design software, just not the big bucks that we see in like the rest of the advanced AI processors from like NVIDIA.
Jenny Horn, appreciate it. Semiconductors on the move for the right reasons, I would say today. There's a fundamental change to some of these policies that have been impacting them, perhaps.
NVIDIA closed the most recent closing session at $159.34, up plus 1.33%. The stock's daily rise of 0.83% was greater than that of the S&P 500. Conversely, the technology-focused Nasdaq saw a 1.02% boost, while the Dow saw a 0.77% gain. The stock of the company that produces graphics chips for gaming and AI had a 10.8% increase in value over the previous month, outpacing the 8.25% rise of the computer and technology sector and the 4.99% gain of the S&P 500. Investors will be quite interested in NVIDIA's next earnings report. On August 27, 2025, the company is anticipated to release its earnings report. The company is expected to announce an EPS of $0.99, which would represent a 45.59% increase over the same quarter last year. The revenue is expected to reach $45.69 billion, according to the most recent average forecast, which represents a 52.1% rise over the same quarter last year. According to the consensus estimates, analysts anticipate $197.54 billion in sales and $4.24 per share for the entire year. Compared to the previous year, these totals would represent increases of plus 41.81% and plus 51.37%, respectively. Investors should also be informed of any recent changes to NVIDIA analyst projections. The changing nature of short-term business trends is often reflected in these recent modifications. Positive changes in estimates therefore indicate analyst optimism about the company and profitability. Our analysis shows that these estimate changes are directly related to the performance of the stock price in the near future. To take advantage of this, we created the rank. Our method provides a transparent, useful rating mechanism that accounts for these estimation fluctuations. With companies at number 1 yielding an average yearly return of plus 25% since 1988, the rank system, which ranges from number 1, strong buy, to number 5, strong sell, has an outstanding track record of exceeding expectations, as verified by external audits. Over the past month, the consensus EPS projection has increased by 0.04%. At the moment, NVIDIA has a rank of number 3, hold. NVIDIA is currently trading at a forward PE ratio of 37.07 in terms of value. This represents a discount to the industry average forward PE of 38.86. It's also important to remember that NVIDIA's PEG ratio is currently 1.31. Comparable to the popular PE ratio, the PEG ratio also accounts for the company's anticipated rate of earnings growth. At yesterday's market close, the semiconductor general industry's average PEG ratio was 2.72. The computer and technology sector includes the semiconductor general industry. With an industry rank of 194, this sector is now in the lowest 22% of all 250-plus sectors. NVIDIA, a manufacturer of AI chips, briefly achieved the largest market capitalization in history on Thursday as its shares reached a new all-time high, reaching $3.92 trillion. Even though NVIDIA's market capitalization fell below this figure at market close, this still beat Apple's record of $3.91 trillion set in December 2024. When daily trading ended, the market capitalization was approximately $3.89 trillion. The chipmaker's shares peaked on Thursday at 160.98 before falling below this level. A stronger than expected non-farm payrolls report in the U.S., a sign of a robust U.S. economy, boosted the shares of tech companies. Forecasts that companies will keep investing in AI advancements increase this optimism and increase demand for AI processors. NVIDIA's latest Blackwell Ultra AI chips were installed by CoreWeave, the first cloud provider to do so. The Dell-built computers have 36 NVIDIA Grace CPUs and 72 Blackwell Ultra GPUs housed in liquid-cooled racks. According to Dell, every unit is put together and tested in the United States. Investor anticipation for next-generation AI gear was evident in CoreWeave's 6% share price increase Thursday, Dell's 2% gain, and NVIDIA's 1% gain. Later this year, NVIDIA's newest AI graphics processor, the Blackwell Ultra, is anticipated to go on sale in large quantities. By providing clients with the quickest commercially available AI accelerators, CoreWeave's early deployment gives it a competitive advantage over bigger cloud competitors. So, what implications does this have for NVIDIA stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. Analysts predict that these collaborations could change the dynamics of cloud computing as the need for AI computing increases. Investors will be watching to see if CoreWeave's action leads to more orders, or if rivals like Microsoft, Amazon, and Google speed up their own chip rollouts. In the market for artificial intelligence, AI infrastructure, NVIDIA has long held a leading position. AI workloads are mostly powered by its graphics processing units, GPUs, and a broad moat has been established thanks to its CUDA software platform. Alphabet, on the other hand, is a surprising business that can compete with NVIDIA. The majority of businesses using AI workloads today utilize NVIDIA's CPUs. To cut expenses and boost efficiency, Alphabet has resorted to using tensor processing units, TPUs, which are proprietary hardware. In addition to renting the processors to other developers, Alphabet employs TPUs internally for AI workloads. Although OpenAI has since stated that it is only testing the chips and is not now planning to deploy them at scale, it was first reported that the business was renting Alphabet's TPUs to help run ChatGPT. This is a significant development, though. The fact that OpenAI, a Google competitor and one of NVIDIA's biggest clients, is considering Alphabet's TPUs shows how capable and affordable its chips can be. The fact that TPUs are tailored for Google's infrastructure and offer benefits in latency, scalability, and cost is what makes them so alluring. Alphabet's TPUs might end up being a better option than GPUs as the market begins to move toward AI inference. In the meantime, Alphabet unveiled Ironwood, a TPU created especially for inference in April. Alphabet may potentially have an advantage due to its vertical integration. It's one of the few businesses that can provide a complete software platform, a top-tier cloud computing platform, and specialized AI chips. Despite dominating GPUs, NVIDIA does not provide a platform for cloud computing. Alphabet can benefit from this, particularly in the context of inference, where latency and cost are more crucial factors. Alphabet also benefits from a good market environment. NVIDIA predicts that worldwide data center capital expenditures, CapEx, will reach $1 trillion by 2028, indicating that spending on AI infrastructure will continue to be robust. However, a few of specialists expect that the market for inference will grow significantly more than that for model training. NVIDIA's CUDA advantage is somewhat offset by the fact that AI inference is far less technically demanding than AI training. As a result, more businesses might search for chips that offer lower per-inference prices than GPUs. Nevertheless, it is unlikely that Alphabet will ever overtake NVIDIA in terms of market share. Nonetheless, even modest increases in the percentage of inference workloads could significantly benefit Google Cloud. This is because the utilization of Google Cloud would also be directly impacted by the use of TPU. Last quarter, Google Cloud's revenue climbed 28% year over year to $12.3 billion, demonstrating the company's rapid revenue growth. More significantly, segment operating income jumped 142% to $2.2 billion, marking an inflection point in segment profitability. TPUs increase Google Cloud's revenue by reducing expenses in addition to attracting new clients. And it's not limited to chips. Additionally, Alphabet has created all-optical switches that drastically lower the price and power usage of TPUs. Because of this, the business has significant operating leverage that the market does not yet recognize. With a forward price-to-earnings (PE) ratio of 18 times based on analyst expectations for the current year, Alphabet is now trading at a discount to other AI leaders. Investors continue to mainly ignore its significant search advantages due to its worldwide ad network reach and distribution, instead viewing it as a search company whose primary business could be challenged by AI. Additionally, they undervalue the company's robust AI products. Independent studies have repeatedly rated Gemini as one of the best AI models, and the number of downloads for its app has increased. Additionally, it boasts Veo 3, the best text-to-video generator available, and it is adding AI capabilities to its search engine. Not to mention that the firm owns YouTube, the most popular streaming platform in the world, and its Waymo robotaxi business has been growing rapidly. Another significant potential growth engine is Alphabet's TPUs. Although NVIDIA has a significant lead, Alphabet could overtake NVIDIA as one of its main rivals in inference if it can attract a significant client like OpenAI and increase the use of TPU, and Alphabet's stock ought to rise significantly if that occurs. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
There's this constant tracking of the launch and ramp of NVIDIA's latest generation server design that has the latest generation chip and chip combination of it. CoreWeave goes first. What do you make of that?
Well, when I look at NVIDIA's release cycle, they are on a one-year rhythm. And in between that year, now they are launching the Blackwell Ultra before the Rubin series comes online. And look, they're almost giving a 50% performance upgrade with the Blackwell Ultra in terms of token processing. So from that perspective, CoreWeave having that chip first really gives them a leg up over the hyperscalers, which will also get their NVIDIA allocation. But for CoreWeave, they have a backlog of about 26 billion. To convert that backlog to revenue, you need the most impressive NVIDIA chips first, and that helps with the faster backlog conversion. So really good news for CoreWeave, especially on the training front, because a lot of these latest Blackwell Ultra chips, I believe, will be used for training, and then the older series will be used for inferencing over time.
So CoreWeave's stock really pushed higher after news came out. I'm also looking at Dell. Help us understand the Dell component in this ecosystem.
Yeah, well, Dell is the one who is making that server. So NVIDIA is providing the chip, and CoreWeave is really bringing those racks and the servers online to be consumed in a cloud consumption model. But Dell is the one who is actually assembling that server and making sure that it can be delivered to CoreWeave. So from that perspective, they are part of that supply chain, and it's a good thing that they get to do that for NVIDIA before any other server maker like
Right.
Quanta or any other Chinese OEMs come into play.
Very quick, we just have 20 seconds, Mandeep. But what's the BI big picture thesis right now and how this AI infrastructure build out's going?
I mean, Oracle and OpenAI really raised up the ante when it comes to, their big announcement, the $30 billion contract, and now this news. So to my mind,
Right.
The infrastructure supercycle is really playing out, and we're seeing that right now.